Alrighty, so we are taking a look at Tesla stock, and in this video, I want to provide a brief update on what we should absolutely be aware of in regards to Tesla stock going into this week. And so I want to touch on some macroeconomic events taking place for this week, as well as really just touch on the price action for Tesla, look at the technicals, and then also cover some fundamental items that we should absolutely be aware of, right? So with that said, let's go ahead and start with the macroeconomic data, right? So for this week, we want to pay attention to Wednesday, September 13th, as we know that at 8:30 a.m., mark your calendars, we're going to get the CPI report, which is the Consumer Price Index, as well as the core CPI, and this is an inflationary gauge. Now, this is a noteworthy report that comes out every single month and really just is a barometer of where we're at with inflation. But what makes this report a little bit more special in regards to going into the end of the month is that this is the last inflationary gauge that we're going to be getting before we had the Federal Reserve make their decision on monetary policy on whether they should hike rates, pause rates, or cut rates. Now, later on, I'm going to go ahead and discuss my belief on what they're most likely going to be doing. But again, you want to mark your calendars for this, date and really pay attention to this, as this is going to have a huge, impact on the market. So let's go ahead and talk about what we've recently seen. So if we look at previous, CPI reports, we see that for a while, inflation has been tricking downwards, right? And this is obviously because the federal fund rate has been raised at an aggressive pace, the highest pace that it's been in generations. And so obviously with the federal fund rates increasing, well, it's been fighting inflation and decreasing it. However, in last month's report, we saw that headline inflation did trickle upwards. And I believe that going into the reading that's coming up for Wednesday, headline inflation is most likely going to trickle up again. Now, I want to go ahead and provide the reasoning behind this. So let's go ahead and take a look at this. So if we take a look, crude oil has been back on the rise again. Now, again, it's not at the peak that it was back in the early beginning of 2022. It's actually fallen down quite a bit. But we're starting to see crude oil trickle up again. And now there's a lot of reasons behind this. We know what the Saudis are doing. We know what Russia is doing in stifling production, which increases the price for oil. And that's why when you go to your local gas station, if you're not driving a Tesla, right, you're seeing that gas prices are once again trickling back upwards. And so that's going to create this inflationary pressure in which we're most likely going to be seeing headline inflation actually trickle up again. Now, just because headline inflation is trickling up again, that doesn't necessarily mean that core inflation is going to go up. In fact, last month we saw this divergence where we saw headline inflation go up while core inflation went down. Now, if you don't know, core inflation is basically just a gauge on inflation minusing the volatile items such as food and energy. And so, although energy is most likely going to be making headline inflation go up again, shelter is really what's holding down. Shelter and services is really what's holding down core inflation, or holding it up, I would say, right? And I believe that we're most likely going to see a decline in core inflation, although it's going to be a minuscule amount. And so we're going to have that divergence between core inflation and headline inflation, and that's most likely going to go ahead and provide some volatility going into this week, right? And so let's go ahead and hop on to Tesla and talk about what are some things that we should absolutely be aware of in regards to the price action. So for a while now on this channel, I've stated that we want to pay attention to this area right over here in particular. And I've said this because when you look at the volume profile, which is completely different from volume relative to time. See, volume relative to price is what the volume profile is. And that means that when there's a lot of volume relative to price, that there's a lot of exchanging between buyers and sellers. And so when there's a lot of people buying and selling, well, there's not a big push or a big swing in one direction, because again, there's a lot of volume going in a certain way at a certain price. And so that's why we see this area of consolidation. It's been a support in the past. Now it's been a resistance. And pretty much since I've said this, it's been spot on in regards to Tesla, where we saw Tesla stock rise upwards, didn't break above this area, ended up getting rejected, had a great catalyst event that came out, and I made a video talking about why Tesla stock pushed upwards that day. The next day, what happened? We swung back down, and then we swung up, and then we had another swing down. And so it's been an area where there's been these big swings, and this also is in sync with what I've been saying with September. See, historically, September is a very volatile month. There's usually a lot of big swings, and it's also one of the months that historically doesn't have great returns. Typically, over the last, or since 1928, in fact, if you look at the data, September just hasn't been that great, and there's a lot of reasons behind that. because we see European fund managers, I often say, they take off in August, which is the reason why August is usually a light month, and then they come back and rebalance their portfolios in September. You also have mutual funds that end their fiscal year. Some of them do that. And so there's a lot of repositioning in the markets, and that's why September isn't that great. And so one of the things I've said is that, hey, if Tesla stock breaks above this area right over here, well, that's great, because then we enter in this area where there's low volume relative to price, and Tesla stock can push upwards. But I don't believe that just yet we're going to go ahead and break into all-time highs for Tesla. Now, I want to go ahead and emphasize what I mean by this, because oftentimes individuals just don't understand what I'm saying with Tesla. And so I want to go ahead and provide more clarity, right? I am long-term bullish for Tesla. I actually have exposure to Tesla in my long-term portfolio. I've been investing in Tesla since 2017, I believe. It might have been 2016, but for sure 2017. And I'm still bullish on Tesla in the long-term portfolio. I don't want, or just in the long term, I don't want people to mix what I'm saying and believe that I'm bearish on Tesla. I'm just saying that even if Tesla does push upwards and has some sort of relief, I'm not yet certain that we're going to start trending upwards and reach into all-time highs. In fact, if we go ahead and look at a weekly time frame, one of the things I've stated is that we have to first, for me to believe that, see Tesla break above this descending trend line, which has been very strong. Tesla has gotten rejected from this descending trend line for quite some time now, right? You see these wicks on these candles where every time Tesla approaches that trend line, there's selling pressure that pushes it down, right? There's a lot of supply, and that pushes Tesla downwards. We see it actually happening for quite some time, and so that's why I'm not yet convinced that Tesla is going to be hitting all-time highs just yet. In fact, one of the things I often point out is that when you look at not just Tesla stock alone, but just the economic climate that we're in, right? We know that auto loans, right, or the interest rates for these auto loans are these high levels, where even if you have excellent credit, you're still paying about 7% for your car loan, which is just absurdly high. And so that reduces the incentive to go ahead and buy a new car. I mean, I bought, I believe, my car back in 2015, and my interest rate was like 3%. Now we're seeing, just with excellent credit at 7%. So it's almost like 100% increase on interest rates. And so that's not good. And that's why I say, hey, as we go into 2024, where I believe we're going to be seeing adjustments in monetary policy, which is going to start reducing interest rates from all aspects of lending, right? That's going to be a good time for Tesla. But right now, it's not that great. In fact, I shared on my community post on this channel, which, by the way, if you're not subscribed, consider subscribing. This way you don't miss out on any future videos. And also you get to see what I say in the community post, as I often post some gems there, right? And so in the community tab, I recently shared how Tesla actually increased their APR for which is the interest rates that they charge for lending and financing their vehicles. And so that, again, is a clear sign that lending has been getting much more tighter, right? And that's obviously not good. And so that's something we want to pay attention to. Now, if we start seeing Tesla fall below this area, well, that's also not good, because, again, we have this volume pocket where there's little volume relative to price. And so when there's little volume relative to price and there's either buying pressure or selling pressure, well, moves the order books. And so when we saw there was a lot of buying pressure, Tesla stock rose upwards. And if we start falling down below, well, if there's selling pressure, that's where we see those aggressive swings down. In fact, when we were over here after Tesla had its earnings and continued trending downwards, we saw that there was strong selling pressure and there's little volume relative to price. And so that's where we saw Tesla pretty much fall down very quickly. And then eventually the buyer stepped in, again, when there's very little volume relative to price, and they pushed Tesla stock back up into this area. And so we're pretty much consolidating. And usually consolidation is the area where you're waiting before the big moves, the big swing happens. And so that's something we want to pay attention to. So I believe that this week we're most likely going to move sideways and more towards the downside, as I don't believe that this economic data that we're going to be getting from the inflation perspective is going to be great enough news to push us upwards. Now, yeah, there could be some standalone catalyst events that come out with Tesla that could, just negate that bad economic data and actually push Tesla upwards, but there's nothing planned like that. We don't have any updates fundamentally for Tesla until next month, where we get the delivery numbers, and that's where we get a little bit of a gauge or an insight on how Tesla is doing from a fundamental perspective. And so I think things are going to be kind of volatile and swinging downwards this week. But I believe that as we get closer to the end of September, what is going to happen? Well, that's where we get the Fed monetary policy decision, and I expect them to pause. I expect them to pause because they're working on lagging data, and you've heard Jerome Powell himself, or if you haven't, Jerome Powell himself, the Fed chairman of the Federal Reserve, has said that they're navigating using stars in the cloudy sky, right? They're using lagging data, and so they have to take a breather and pause, just like what we saw the Central Bank of Canada do. And so just then, that's going to provide some relief. And so that's why we're still going to be in this area for quite a bit. Now, what else do we want to pay attention to? Well, one of the things I often say is that you want to pay attention and have a holistic approach to the overall markets. That's why you want to look at fundamentals, technicals. You want to look at economic data, alternative data. I mean, there's so much different sentiment that you want to gauge. And one of the things I've sent in an email out, by the way, if you guys are not part of the free weekly market insights that I send out, check out the pinned comment in the comment section below, because I just sent out an email. Again, I send this out just weekly, so every Sunday, so you missed this week, but if you sign up, you'll have access to next week, where I talk about, what are some things that we should pay attention to for the week. And one of the things I've highlighted is that if we take a look at Apple, right? Apple actually is having an event on Tuesday where they're going to be launching the new iPhone event, the iPhone 15, which, let me know in the comment section below. I should probably do a poll on this on my community post. Are you guys most likely going to be buying the new iPhone, right? Now, the reason I'm talking about Apple and tying this back to Tesla is because the thing that many people don't understand is that Apple has a huge weighting on the indices, right? When you take a look at Apple and its weighting on the S&P 500 or the NASDAQ, the overall NASDAQ, it has a huge weighting. And so typically when Apple does well, or if it performs bad, that has an impact to the overall markets. It bleeds into the overall markets as these indexes have a huge weighting on Apple, and so it could shift the markets. And so what have we been seeing? Well, we saw that last time Apple had its earnings, it actually fell down a lot. And I know this left a lot of question marks on a lot of individuals' heads, simply because we saw that Apple actually beat their earnings estimates. And so everyone was like, why did Apple beat their earning estimates? And I've often preached that there's a lot of nuance in regards to these earning reports, right? There's the forward guidance, and then when you actually look into the data, yeah, Apple beat its earnings, but there's a difference from beating analysts' earnings and expectations when they're let me just try to simplify this, right? There's a difference between a company actually growing on their earnings and doing well, or just beating the expectations that analysts have already revised down. These analysts, they get hints on what's most likely going to happen, and then they revise their estimates down. And so even though Apple beat the estimates, what we saw were new iPhone sales they're not growing, and they're actually declining, right? And so that's why looking into this week for the iPhone launch is going to be something you absolutely want to pay attention to, because if we don't have any, and I'm not expecting revolutionary updates, but any excellent updates from the new iPhone, well, if it's just going to have a very mediocre event, and it doesn't pull that much attraction to the new iPhone or attention to the new iPhone, that's going to be bad for Apple. And this is what we typically see. Historically, and let me go ahead and show you guys this chart right over here, right? I'll X out of this. So historically, we see that Apple actually trickles upwards in the months leading to September, where we see July and August going upwards, and then September we fall down right before or right after they have their iPhone events. Now, this again is in sync with September being historically a bad month for the markets. But what did we see this year? Well, we saw that August for Apple wasn't that great. Typically, Apple trends upwards, but we saw that they had a bad quarter. It wasn't that great. And so what I'm expecting is that Apple had a bad quarter. Their iPhone event, if it's not that great, it's going to cause more selling pressure for Apple. And also, what have we recently been seeing with Apple? Why did we see Apple actually start trending downwards in the last few days? Well, we got this news that officials in China are banning, or government officials, they're banning the use of iPhones. Right now, again, this is a minuscule amount in regards to the overall population of China. It's not like iPhones in general are banned in China. But still, this is bad news for Apple. And I want to go ahead and share this chart over here as well, where we have Apple's revenue exposure by country. Now, of course, if you add up all these percentages, it's not going to add up to 100, because I didn't include or it just doesn't include all the countries. For example, we have the United States, China, Japan, Germany, India. For example, Canada is not on here. Why? Well, because I just wanted to highlight, or you really just want to pay attention to the big countries that are most likely are going to have a significant impact on Apple. And Canada is in sync with the United States anyways. And so what we're seeing is that China makes up about 18% of the revenue exposure to Apple. And so this idea that we're seeing bans on Apple, that's not necessarily a good thing. Now, some individuals may say, oh, well, we just got to grow our exposure in India, and India has a huge population and that'll make up for it. Well, at the end of the day, yeah, that is true, but it doesn't quite happen overnight, right? And you don't want to just grow one market and then just lose it and then have to build another market. And so even if we do see Apple start growing revenue in India, which is projected to do in the future, let's actually not dive into this, right? I mean, the thing I'm saying is that you're going to have more quarters of losing revenues. But the thing, or what I'm trying to say, is that Apple's not doing too well. And typically we see Apple after September, right? After it sells off historically on September, we see it actually bounce up in October. Well, with all this, these fundamental updates, these catalyst events, I believe that money is going to circulate, from Apple, or really just pull away from Apple and pour into the big tech companies. And that's why I believe that after September, going into October, November, December, the capital that's going to be exiting Apple is going to be going into your mega cap companies like Meta, Microsoft, and Tesla. And so I believe that right now we're going to have some consolidation for Tesla, some volatility. After we had the September meeting for the monetary policy update on September 20th, is going to provide some relief. And as we start getting closer to the end of the year, that's where we're going to go ahead and most likely see some more positive events for Tesla, right? And so, and then again, the next question is, are they going to hike, in the next meeting or not? And so the idea is that hopefully they pause. I'm talking about the Federal Reserve, and that going forward, we're pretty much at the last stages of pain for Tesla, and things may start looking more optimistic going into 2024, especially the mid-year of 2024. Now, going to talk about Tesla from two perspectives over here, right? So yes, I have exposure to Tesla in my long-term portfolio, but I also have a short-term trading account where I trade the fluctuation in price for a lot of stocks like Tesla. And so right now, I've actually been sitting out and trading Tesla as it's been having these huge swings. For example, last week I called out a trade on Apple, and it was a great trade idea where I said, hey, we're going to want to either short Apple with the shares or get puts. And I specified which contracts in the Push and Profit private group. I said once Apple hits 179.95, and we saw that. In fact, if you check out my last video, I actually show you the message of what I say to the Push and Profit private group, or what I said. And we saw that this was a great trade for Apple. And so right now there's a lot of opportunities elsewhere to go ahead and take advantage of this fluctuation in price. I'm not really trading Tesla. And again, if you want to go ahead and join that Push and Profit private group, it's going to be the first link in the description below. But right now, I'm currently not going to be touching Tesla, as we're not seeing any big moves. I'm going to want to wait for the data to come out, possibly after September 20th. That's when I may start trading it more in my short-term trading account. But in the aspect of my long-term approach, if we do see more selling pressure for Tesla, well, then I'll do just exactly as what I did last time. I waited for the selling pressure to finish in Tesla. Once I saw confirmation of an uptrend, I added more into my long-term portfolio, and it's going to be the same exact concept. If we ended up seeing more selling pressure for Tesla, then I would wait for that selling pressure to finish, start seeing confirmation of an uptrend, and then add more into my position. And of course, if Tesla breaks this descending trend line, I am obviously going to want to add more into my long-term position, as it shows that there's a new trend going on. Now, with that said, if you guys want to learn more about the 3 stages of reversal, make sure to check out this video right over here, and I'll see you guys on that next video. Take care, guys.